Welcome to Trading Nation. I'm Sarah Eisen. Today, let's do a little socializing and look at Twitter and Snap. Check out this stat, courtesy of our friend Charlie Bolello at Pension Partners. 1 year ago, Twitter's market cap was $13 billion, while Snap's was $25 billion. Now, the two names have traded places. Twitter's more than doubled, while Snap has been cut in half. Which is the better buy right now? Boris Schlossberg is with BK Asset Management. Matt Maley is with Miller Tabak. Matt, first to you on the charts.
Well, you know, it's funny. Snap does have a little bit of upside potential, but there's a lot of risk involved in that one. So let's look at Twitter first. When the stock, when it broke above $25, that was the key resistance level. That was its highs back in 2016. And that made, when it broke out from there, we turned bullish. It went very, very strongly, trade up to $36. Since then, it saw a decent pullback, but it made a nice higher low. Now it's rallying back up towards those March highs. If it can break out that and follow that lower high, that higher low with a higher high, it's going to be very bullish. So there's a lot of potential upside there. Snap is a lot more dicey there. I mean, the stock's is very oversold. It's kind of caught in a sideways range. If it can break above its post-earnings report level of 1170, it's got a high short interest. It could rally a little bit, but boy, there's a lot of risk involved in that. So I wouldn't be chasing it. You might want to take advantage of that to sell it if you still own it, or even short it if it gets up there.
What do you think, Boris? I mean, there's a lot of bearish sentiment right now around Snap.
Well, I may be guilty of confirmation bias because I spend all my time on Twitter and exactly 0 time on Snap. But I do think Snap is dead man walking at this point because Facebook has completely stolen their thunder through Instagram stories. Everybody has migrated to that platform. And Twitter, on the other hand, is the news feed of the internet. It is a tremendous product, very unique in its own right. It could probably be a great standalone, but could also be a very interesting takeout candidate for Alphabet. So I like Twitter long-term much, much more than I'd like Snap, and I think that story is going to diverge continuously.
Boris, that's sort of always been the bullish case on Twitter, though, even when it was going through tough times, and that is that it was the definitive news source. The president was using it as one of his primary methods of communicating with the American public, and it was seen as an acquisition target. You think that the sentiment has changed and the business has changed, and now that makes it more reality?
I do. I don't know if they're going to be an acquisition target, but I think they've stabilized their business. They've really shown that the model is starting to work. They've added video. They've added nested threads. They've basically made a platform very, very user-friendly at this point, and I just absolutely love it. As you know, everybody in finance lives and dies on Twitter, and that's probably true with many other professions as well. So I think they've carved out a niche that's essentially unassailable at this point. That's why the company has long-term potential.
I can think of one industry in the news business. We use it too. Guys, thank you. Boris and Matt.
Thank you.
And thank you all for watching Trading Nation. I'm Sarah Eisen. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.